3% for the first time in 14 years. So, this is clearly going to be a problem for, as Harry was saying, hopefully months, but some of the experts are saying years.
Yes, well, let's speak to an expert now. How will this be affecting our monthly payments? The property expert, Russell Quirk, is on the line. Good morning to you, Russell. Look, a lot of people really worried about this, and they've got good reason to be. Give us your assessment of where we are as a percentage of our repayments when it comes of our household income when it comes to our mortgage repayments.
Yeah, so the analysis this morning is that the cost of a mortgage as a percentage of our income has now gone up to 30%, which, sounds pretty high and indeed is higher than it has been. So we've been hovering around kind of 25% for a while. But of course, we've been rather spoiled, I would say, with almost artificially low interest rates, really, for the last 10, 15 years or so. This mortgage is at 2 to 2.5% that we now think is normal, really is not. If you look back in history, typically a reasonable mortgage level in interest rate terms is about 5 or 6%. And of course, some of us can remember 20, 25 years ago or so when mortgage rates were in excess of 10%. We shouldn't forget also, though, Isabel, that the average renter pays about 45% of their income on rent. So 30% sounds high, but there's a context here where actually in the scheme of things, it's really not that high in comparison to renters and certainly in comparison to what it could be. The question of interest rates, though, what we're making a bit of a fuss today, and we'll do over the next few days, of course, about the fact that fixed rate mortgages have increased in value or increased in cost quite a lot, and they have. But what we need to understand about the mortgage market is that they price their products to what's called the swap rate. And the swap rate in the last 10 days or so obviously started to increase because of pressure on the pound, because of the reaction by the markets to Kwasi Kwarteng's speech, and therefore the swap rate has increased. That has already, and here's a bit of reassurance, that has already started to reduce significantly. So the good news is that in the coming weeks, not months, but in the coming weeks, the mortgage lenders should now start to reduce their fixed rate products, so the cost of those mortgages, in line with the fact that wholesale mortgage rates have already started dropping. If they don't, it will mean that the lenders, a bit like the energy companies, are simply rinsing the public and increasing their margin and taking advantage of this current situation. Let's hope that that doesn't happen.
To clarify, if they do drop them over the next few weeks, will they only then have to put them back up if the base rate goes up in November?
Yeah, if the base rate does, but and obviously that will be in response to what Andrew Bailey and the Bank of England decide to do to tackle inflation. Of course, they have one job, basically, the Bank of England, which is to try and keep inflation at 2%, which I think is a ridiculous and now arbitrary target. I think the thoughts of Liz Truss, her statements in recent weeks where she was going to change the Bank of England's mandate, I think I know she's got other things on her plate right now, but she needs to think about doing that. And of course, with inflationary pressure, the fact that we're now going to have this energy cap, which kicks in very, very soon, whereby the average household won't pay more than £2,500 no matter what the cost of energy does. The experts are saying that in itself will take between 3 and 4 percentage points out of inflation, and therefore that reduces the pressure on the Bank of England having to increase interest rates in the coming weeks and months.
But hope. Sir Keir Starmer saying he wants to see a reversal of the budget because the families face eye-watering mortgage increases, quoting around £498 hike per month for mortgages as their 2-year fixes ends, assuming that interest rates are at 6%. I mean, that's an awful lot for an average household, an extra £500 a month on their mortgage.
It is, and as I say, that will now start to come down. We also need to remember that the government of the day a few years ago introduced a thing called the MMR, which was it was effectively the mandate to lenders that they have to stress test their borrowers when they're underwriting new mortgages. So for the last few years, whenever you've been granted a mortgage by Halifax, Nationwide, Santander or whoever, they've already dialed in these increases to ensure that people that currently hold mortgages can afford them. The other thing that, of course, is true is that about 70% of people right now are on fixed rate mortgages. So they won't be affected at the moment by any of these increases whatsoever. So that's the majority of the mortgage market, whether that's investors, first-time buyers or whoever. The majority right now, their rates are fixed. So by the time they come off that fix, whenever that is, depending on that individual, rates should be certainly significantly lower than they are now.
Would your advice be then, Russell, that in the next few weeks, providing mortgage providers drop their rates before November, to get in there and fix maybe a 5-year fix, given that we're on a long-term trend away from low interest rates and we're not going to be looking at, 1, 2, even 0.5% anymore?
Yeah, possibly so. I think, look, definitely don't fix today or tomorrow, as I say, because those rates are likely to come down in line with swap rates already having reduced. So yes, I would kind of keep my powder dry for a few weeks, and then certainly think about a shorter term fix than 5 years, because I'm, as you can probably tell, a bit of an optimist here. I think that in the long term, interest rates will go back to some version of where they've been over the last few years. So maybe not down to 2% mortgages, but maybe we'll see 3 to 4% as normal. So I wouldn't go fixing at 5-year terms, because of course that the rate that you'll do that at will be higher, but certainly wait a few weeks and then look at 2-year fixed rates, which I suspect will be back down at kind of 4 to 4.5% sometime fairly soon.
Curious where you see all of this impacting the housing market itself. I mean, estate agents will tell you that it's been incredibly quiet in the last few weeks. Then there's been a bit of a flurry of people trying to secure mortgages before they think that they, in the last 10 days or so, thinking they're going to go up. You're now predicting that they'll come down. I mean, are we going to see a housing crisis? Are we going to see repossessions, or are things going to settle down a bit?
The last time we saw significant repossessions was when interest rates did go above 10%, and people simply handed their keys back because they couldn't afford that burden. We're nowhere near that level, Isabel, nowhere near that level. There's a lot of doomsters, a lot of kind of pub bores, as I call them, kind of being rather gloomy about the housing market. They assume that there's this seesaw effect where if there's some interruption to the status quo in the housing market, and whatever that might be, and of course we've seen Brexit and the pandemic and so on, where lots and lots of experts trotted out and said that there'd be a house price crash and there'd be a reduction in house prices and values and so on. And of course, all of those so-called experts were completely wrong. And I think they're wrong this time too. There's simply generally too much demand. There's too much cultural effort on the part of people in this country to want to buy property. And I also think that the government will always intervene, because, when you've got a government that's that has as its strapline keeping Britain moving, then clearly if there was an issue in the housing market in the future, this government will do exactly what the previous one did, which is to intervene either with a stamp duty holiday or something. So I don't buy into house prices dropping. Will we see house price growth dilute? Yes, but I bet money, to be honest, that if we're sitting here talking in 12 months' time, house prices will not be lower than they are today.